learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming in on May 7th, 2020, and the stock market just got crazy. Something has happened, but that doesn't necessarily mean you're going to see the stock market go crazy in terms of prices moving, but we are seeing a crazy development. And where we are right now, we talked about this analogy on stream today. It's like being stuck on the log ride at Disneyland, you know. You just get stuck in the dark cave. So it's like, even I'm referring to the markets here and the market moves, but things are developing. We're kind of just stuck here on the mountain, and it's kind of like, okay, what's going to happen? You're not in the best place. You're stuck on a ride, but you haven't necessarily had the accident escalate beyond being stuck. Now, if you get stuck up there too long, so, but this is where I mean to say, because again, I want to go over a lot of stuff I think is important today. And really the main thing I'm talking about, what made the market crazy today, the trade war is going to come back. President Trump said a few things, and it's starting to get hinted at. And I think we kind of saw some of those comments today that we might see some of the trade war issues come back to life. He said we cannot know if they're fulfilling their end of the trade deal bargain, and a few other things. And again, all this back and forth now between where the virus started, that is escalating, and that is going to be a very, very key point. And this is very similar to a time, we'll talk about it, but that is why it got crazy. And then a few other comments by the CEO of Blackstone, one of the largest companies in the world in investment. It's not a company. I mean, they own they own like 10% of the world's cash or something. It's crazy, but they pretty much own every single company on the S&P. But we'll talk about that. Things are getting crazy here. However, the key is going to be timing, and we still have earnings, and we've actually saw some pretty big moves. But let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the plays, see the plays, ask questions, anything. All we ask is you're positive and respectful. And the most important thing you need to do, post your watches below. Let us know what you're looking at. You got any plays, comments, remixes? What earnings are you playing? Do you play this? What do you think about everything? Just come on, give me some feedback. We're going to go over them in the morning. Oh, right off the bat, the first thing here is the trade war. And I think this is serious. The news dropped today. There was a few different headlines from Trump, and you saw the market react, but not too much. Today was an interesting day. We still dropped 200 points, but this was a real big hint, I think. And again, just thinking of the timing and nature of where we're at right now, you're seeing all the earnings, whether it's good or bad. I mean, everyone's a lot has already been priced in more or less, but I wouldn't really call it pricing in as much as people are patient in waiting, because when you don't know what's going to happen, you need a lot more information. But that being said, you know, that's overall picture how the market's moving. But now with what Trump said today, it's escalation, and at a it's a hinting at it. So I wouldn't be surprised to see next week or 2 weeks, and we'll see how this China rhetoric, that whole China trade video I made a month ago, I think that's going to really come back to life here. And this is just more evidence, but you could kind of see the ball's moving. We just need to see how much momentum this whole trade war gets, and just pay very close attention to what Trump says. Watch his Twitter at these moments in probably the next few weeks. So you don't know when, but watch and see what gets tweeted, and then how the market reacts if it is related to this China stuff. Because if the markets start really taking a negative and are willing to move and sell off, that is going to be a really, really key sign. And now on the other end of the coin, looking back at all this is what happened in 2018. So you guys were probably here. You guys saw this whole trade war trade that we were doing, but you could kind of see it was more March, and we had that drop in February. There's more politics here, but then this was kind of how the summer looked coming from May. There was the trade war, and then they would make like little deals. Then the market would react here. Then things would be good, and then react and good. And then ultimately, once the financial problems got mixed towards the end of the year, that was now kind of the kicker, and that's what made us drop down here, man. These are some crazy years here. This looks so wild, man. Welcome to 2020. But that being said, though, it's a similar timing to the approach, and it's going to have an interesting effect. Why I'm bringing this up with summer is just the volume and the trading volume. And again, picture the market here, because there's going to be crazy developments, and the market is getting crazy. The news is getting crazy, but the stocks aren't necessarily moving crazy. But the fact that they aren't moving is crazy in and of itself. So hopefully you're hanging with me here and get what I'm trying to say, because it's paying attention to this stuff, and this stuff is important, especially with what we saw today. And then now just kind of waiting for this stuff to escalate to be able to respond and then really be able to hit it on the head and get a good play out of it. So there was that. And like we said, Finch is the Blackrock CEO. And he said that they need to get more stimulus, and to get it would be through raising the corporate tax and getting it through the corporations. So this was weird. I think it kind of points, and this is my opinion, to more politicization of this issue and what's going on. But that's also very, very weird, because Wall Street really doesn't care, and they shouldn't. So it's interesting to see a stance at taxing the corporations. And even though it may be true and you could get a lot of money for the corporations, I mean, with what's going on, it's hard to say. But it was a weird comment. But now also, the stuff he said, it just points to the grim reality. He said there is going to be a mass wave of bankruptcies. He says planes are empty, and he really painted a grim picture, and he's kind of made a call for more stimulus. And maybe, depending on how things play out, watch the markets, watch what we get with the developments both today, tomorrow, next week, next month, but see those calls for more stimulus, who's calling for it. And if you start hearing that noise get louder and louder, that will tell you something, and that'll let us look towards the Fed and then ultimately bonds. So that was interesting. And then even the last point, and this is just, again, the nature of the market with what I'm seeing today, is that I'm getting these key points of what's happening today, some of this news, and I could just already see it kind of forming over the horizon. The issue of all this is going to be timing, and that's the next big thing. If there is anything that may move the market, and I think this could be the kicker, is when this bankruptcy wave comes in. And there is going to be bankruptcies, but they haven't happened yet. Again, we're stuck on the ride. Bankruptcies would mean something happened and the ride got loose, or some people fell off that were stuck, and that would be the next wave, and that could paint a different reality. And then defaults, that'll change the credit ratios and all sorts of stuff. So those are the keys. The market has gone crazy, but now we have to make sure we don't go crazy and expect this boat to move at a certain speed and be able to observe it. But these were some key developments today. And again, we're still in earnings season. We saw some earnings, but it's going to be exciting overall. So let us get into the plays. So right off the bat with some of these earnings, I would say Uber and Lyft, they did good. And really, it's just, I mean, the plays for tomorrow, I would focus more around squeezes. And what I mean by that is that, you know, some of these companies are doing good. They have really, really bad expectations, and then they're popping. But now some of these companies, not all of them, are shorted. Again, some people thought the market, when the market was dropping, it was because of shorts. It wasn't, but stocks like Peloton, they have a 50% short interest. So depending on how the market takes it, we're down after hours now, so that could save them. But if there is any sort of bullish activity in any way, watch for those, and even then, watch for those to be laggers and leaders. But I like those two. And then now, for the plays that we actually made today, I only made one play. I sold out of this service now. We bought this contract at like 50 cents. I think, yeah, right here. Got that on April 29th. Remember, we bought two of them, so I have one. That was the earnings play. I sold one for $500, bought at 55. Still holding the other one, got a net profit. But then I did a win play. I did both of the orders in one, and the total was $92, but I played win, and I wasn't going to play this play, and it was really funny. We're going to look at this. I'm going to show you, because this is what I've been telling you guys with earnings, and what you need to be focusing on is just pay attention to the companies that move and understand which companies move, and that is really what you want. So even if you miss some of these you put these in your memory bank. This is how you learn about earnings, and now next quarter, the rest of your life, you're going to get to pay attention to what moved and what didn't. Did it move 10%? How many dollars did it move? And understand that, so that you are prepared as you keep going. But I was trying to point out win as being a mover, and I said I wasn't going to do this play, and the key I brought up is that nothing really was too appealing. I've spent a lot. We've made a lot of earnings plays. You know, I got some profits. I got service now. We hit those Facebooks. I have like $2,000 of profit on the Facebook, but I lost profit on some of those older plays. But even then, I didn't want to force too much, and I felt like I took a lot of earnings plays this week already. So I was like, well, unless it's like really, really appealing, and I still have more earnings for tomorrow on the table, so I don't want to keep throwing more money out there. So I said I wasn't going to do the win, but then I looked at it, I explained, I was like, well, I could do $50 both ways for the strangle. Win could be a mover. It should be a mover, but ended up win was actually the only stock that reported today out of that list that barely moved, and everything else broke out. So we'll go over those. I'll show you that on the chart here. But now, as far as that's concerned, we'll see how that win play plays out. I would watch win, but now watch those squeezes tomorrow, and then there's stamps tomorrow morning. We only have the put, but they should do the dance. So if tomorrow is bullish, or even kind of they had a crazy run at the end of the day today, we only have the puts, but they could do the earnings dance. They may outpace the market and move. And if we get that in the first 10 minutes, I'm going to look, but I I don't have any calls yet. And I just hate the pricing on it. It's really expensive because stamp is one of those you never know what's going to happen. It's kind of like ANET where it could move a lot and you're going to pay a lot of money to get in it and it'll go crazy even before earnings. But when earnings comes out, it just, at the end of the day, it just may not move. You're paying such a premium on the options for earnings on like ANET and stamps because of those bad events they've had. Think about it. It's a bankruptcy in the past. It's something bad on their record. They've gotten an accident. They're going to flinch more. The investors flinch. Oh my God, earnings. They're scared of it, so they're charging a lot for the options. It's insurance. So that being said, the prices are high, but I don't know what it's going to do. Snap could really, I keep saying Snap, stamps can really go crazy. So I like it. I'm going to look at it in the morning. We'll see. I'm either going to really have to decide in the morning, depending on where the market's at and the pricing. I'm either going to have to get the call, and if it runs and I get it, awesome. If not, if we miss out, oh well, or hopefully it cucks and doesn't do anything and then the premiums die down and we could get a good earnings play. That would be the best. So we will see, but the pricing is it's an expensive one. It's hard to get and gamble on stamps at a cheap price. I got that one put for like what, 160? Yeah, I got that call at 80, but now, and that's not bad. And that one's what, is that 3 standard? No, that's 2 standard. Oh, yeah, that's 2 standard deviations at $80. But then the calls, it's like $230 for 2 standard deviations. So you see there's a big disparity there. And then even if you wanted to do a debit spread, it is just, there's wide spreads, wide ask, and it's just, so you might get filled at something good. So I need to experiment with it tomorrow, but I really do have to make the decision. So we'll see. Hopefully it plays out in our favor and the stock gives us something good to work with tomorrow. If not, though, keep your eye on that. Then there's also going to be booking. They have earnings after hours. If you're ballsy, you could try to play the run-up or even play the earnings. It's just expensive as well, too. But I think booking could go down, and I still have those old debit spreads, so we're down a lot on those. I might average and just get like one more, maybe. But if anything, I'm cool with that position. I still think booking could move. It's just expensive, and we already have an old play with time. So if anything, it'll just come back to us, but we'll see. And then lastly, TTD, the trade desk. They report tomorrow, I believe. That's a decent one that can move. Keep your eye on those. Those are usually a big mover, but I like those. And now, finally, as far as everything else, it's just going to be some of the main stuff we've been looking at, but a lot of continuations after what we saw today. So there was PayPal, and this is what I'm saying. Win was expected to move 10%. It moved 2%. PayPal was expecting, I think, like 6 to 10%. They moved around there. But this is what I've been saying for you guys to do. Look at all of these earnings and go back and see if they hit. This is what you want to see. So even if you miss the play, take the knowledge, take the data. That is very, very valuable. Oh, damn, this thing kept going, man. And the data behind this one is that you get to look at it and say, okay, well, Twilio actually moved. Don't forget that for the rest of your life now. And understand how much it moved and then what it went. But then before you kick yourself, like, did I miss it? Go look at the option chain. But now when you look at the option chain, this is telling us something. We're on our 5th week of 1,000%ers. These are going to be crazy plays. You see them hitting. The market maker is wrong. That means the more you see them wrong, the more opportunity there is. But when you kind of see the hatches tighten down and not too many things are hitting and it's cuck season and it's condor season, that's your problem. And that, that's not going to be good. But this case, we're seeing a lot of mistakes on the errors, and that's good. So maybe we could, you don't want to be too timid with some of those plays when there's going to be more opportunity than not, but learn from it and pay attention. So looking at Twilio, go to the option chain. Like, these contracts are going for $40 and they're going to be $5 in the money. These ones were mispriced. That was on the weekly. Even if you went on the next week, same situation. You could have got next week 150s at 50 cents. Even if you went to the June, like, you got these at what, last trade 60 cents for the 165s. Like, you would have done really, really nice on that one. So Twilio was one that hit. They went crazy 30%, but now, like I said, PayPal, do the same thing and go over them. And both of these plays, watch them tomorrow. So depending on how the market plays out, these could get really, really active. Again, you're seeing big continuation. ServiceNow, W. There's a few. I think there's a few other ones. I think Netflix. But so don't sleep on the fact that these continuations could go crazy, because sometimes even if you've seen this, if you've been on stream before with a couple of the earnings seasons, we've hit plays on earnings and maybe they'll do good, but you could actually make more money the day after earnings in the continuation. So this is good when you see this happening. And again, if the market maker gets beat, that means, they're going to scramble and then things will be all over. So hopefully more opportunity is created through, one inefficiency causes a fix, and hopefully it leads to another one, and we could take advantage of that. But PayPal, take a look. What would you have bought? What was the range? What was the criteria? What was pricing in? That's what you want to look at and go to these options and see. So like PayPal closed at 120, 130. They were pricing in like a $7 move and they moved $12. So they moved outpaced, but you could even see what would you have gotten. So this one would have been a little bit harder actually on the weekly. So the PayPal weeklies were a little bit more expensive because you're seeing you wouldn't have been in the money for like $70. So compare that to the one I just showed you with Twilio. Do you see the big difference? Because on 1 week or 2 weeks, you could have spent $50, $70 and been in the money. Those were really, really mispriced. Whereas now, PayPal moved above expectations. It's still going up, but it's again, and there's a big difference because PayPal only moved 10% and Twilio moved like 30% or 23%. So keep that in mind. But at this moment, you're kind of seeing, okay, well, PayPal, that means it was a little bit more priced in or a little bit more expensive, but you get to really see how cheap that Twilio was considering the move. But keep this in mind. And now, like I'm saying, when I was trying to say which company was going to move, pay attention to which companies move. Pay attention to how PayPal beat. How much did it beat by? What sort of move can a stock like PayPal do? What's a reasonable expectation you're getting to see from experience? So watch PayPal win. There's Peloton, and now you see they're up 15%, and now they were probably pricing in a lot more, but this is the one I think is going to get squeezed tomorrow. We'll see. Again, don't get too eager to get on the squeeze train. Like everyone's like, oh, it's going to get squeezed. No. We have to see, but there's factors working in their favor. So I don't know, what did they close at here? Like $37. So they were actually pricing in $6. So that's why you can see here, they were pricing it in. So Peloton options, you actually didn't even make that much, even though they went 15 and it's an IPO. So this one is going to be great for a continuation tomorrow because now the premium should die down, but the stock did good. And it's an IPO. You don't know what it's going to move like. We will see. I don't think I've ever traded Peloton in my life. Tomorrow might be the day. We will see. Peloton. So them, I think Square, they moved within expectations. They didn't move. Remember, I wanted them more for the pre-run up, but that one's going to be a dud if you play that. Then there's Etsy. Wait, no, that was Etsy. What happened to it? Where's Square? Yeah, Square. No, yeah, they both moved the same. I remember it was similar. So both of them did. And then RNG, they got clapped, but then they ended up coming back. But really, a one move like even Twilio, and we're going to see Roku tomorrow. Watch them. I'm still holding that, and if I'm up on that contract a lot, I will sell it. If I'm not up over like 100% on that contract by earnings, I'm probably going to just hold that 160. I only have that $160 call on there, and I think I got the puts. I'll have to double check. No, I only got the calls, so I may need to look at the puts tomorrow. But if anything, it should work in my favor if the IV isn't too high. But watch them. APDN, they got halted after hours. They went up. What was the other one? I think that was it. But watch Baba, again, watch the China stocks and how they get affected by any of this rhetoric. And then TLT, of course, as a compass. So when you see the market go down, if you don't really see bonds make a big move with it, that will let you kind of understand the severity unless there is manipulation. So we've been watching that through the day. And then Disney, too. I like them. I thought they would have had a big continuation in that dividend cut yesterday, but they didn't. But keep watch on them, and that's huge volume from them selling. And then as that people start to realize the dividend gets cut right before their quarterly dividend. Oh, man, that was killer. So it's bad. So I think that one's going to move slow, kind of summarizes the market, but that one could get pretty ugly, and they might outpace. And then finally, Abivai, I forgot. They had some positive, something related to Humira, anti-inflammatory, but they had something to do with like, it was anti-inflammatory, but it was like an antibody, and they had some good things on that. So watch Abivai. I like it still in the long term. I think we got a dividend payment coming up soon, but gotta love Abivai. Gotta love them. But yeah, I think that's pretty much it. So I'm trying to end this video, but I don't know what's happening because Baba just shot to 192, then 190. This is weird, man. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you in the game, and I need you balancing and controlling your books, baby. And tell me this: what do you notice? What do you acknowledge? I said it wrong. I know. You got me. It's okay. But tell me, did you notice that? Maybe you didn't. Maybe you didn't. Maybe you acknowledge it, but tell me about the balance. Tell me about the budget. What do you got for earnings? What do you notice? What are you acknowledging? Are you acknowledging what you know you need to do? What is wise? What is smart? Be smart, my friends. Stay goated. Stay blessed. The code loves you. I love you. I'm going to see you in the morning. Let's go.